Futures trading is risky and can result in substantial financial loss.
Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short Term Trading Live with Oscar. We got trades for Monday, 7/02/07. Here we are in July. Right off the bat, let me just mention something about July. July 4th is right in the center of this week. I never, ever trade the day before or the day after a major holiday. Anyone who follows my videos and follows my work knows that about any holiday that's passed. Also, this week happens to be a little different than other major holiday weeks because it sits right in the center of the week on Wednesday. Tuesday is a half-day trading. I usually don't trade Thursday. Most traders I've known in my 25-plus year career use this week to go on vacation. That means they're going to take a long, extended weekend, starting probably on Tuesday. So it'll be out Tuesday, Wednesday, Thursday, Friday, Saturday, and Sunday. I've noticed that time and time again. It makes markets. Volume comes in. Volatility goes like this. I stay away. I suggest you guys do the same. Take this week. Spend it with your kids. Have a good time. Do anything but trading. Do some homework on the trading. And last but not least, when it comes to this, I say take a look at everything, but don't discount what you see during this week. That's what I want you to do. Take a look at everything you've seen up and down and discount the whole thing. Because generally for me, I pretend this week doesn't exist. So I want you guys to do the same. All right, a couple of topics that we're going to cover. One thing, we have a rounded top. Most likely, you see a couple of question marks here. I got a couple of charts to show you. It looks to me like we're getting into a rounded top here in the indice markets. I'll put up some charts. We'll take a look at that. The gold got above its 200-day moving average today. I have a chart to show you on that. But with the gold, you know, it could be because of the terrorist attacks that just took place in London and Scotland. So it may be the only reason why gold just got above the 200-day. But we will look at that. It's very important. Discount the action, as I've told you. Make sure you do that. It is so important, and I never trade the day before and the day after this holiday. So be prepared for me to probably do nothing, maybe throw out a video or two, but I will not get caught up in the fanfare here. The other thing is the format change, ladies and gentlemen. When we get back from this long week, next week, on Monday next week, the format change will be 100% complete. There will be some new things on my site. I cannot tell you the outpouring of requests are unavoidable. The emails I've received, the instant messages, everything I've received, people pleading with me to please put my numbers back on the board. The other side of that is there's been tons of emails stating, Oscar, it really does help me, the fact that you gave me an area and let me do the rest of the homework for myself. So we've come up with a plan. I think you guys will like it. There will be a certain set of people who can have access to the numbers and the rest of the people will not because they don't feel they need them. I'll show that to you guys when we get back. Be prepared for it. It's pretty exciting for us. We plan on opening up our seminar and webinar rooms at that point. So I got a couple of charts to show to you guys now. I'll revert to the charts and we'll come back and we'll talk a little more. So we talked about a possible rounded top. Ladies and gentlemen, this is what a good bull market looks like. You put a high in, you dip down a little, you put another high in, you dip down a little, you put a high in, and you just keep going. Okay, and you've seen it, and you've seen me mark these and show you the 3-day rule, 3 in and 3 and out. Well, here we are. Finally, we put a high in, we broke. We put another high in, we broke, but the high was lower than the previous high. Interesting, ladies and gentlemen, understand what I'm saying here. This high was lower than the high before. Then we broke again and we put in another, we attempted at another high and it's even lower. So we have 1, 2, 3. Rounding top starting to happen here. This will be the first time, if we do not make new contract highs today, this is going to be the first time in a long time that I'm actually going bearish. Understand what I'm saying here. A rounded top. I've been bullish for 4 straight years. And you guys, you OMNIX that follow me, you've seen my videos. You've seen me stand there in front of the video and say, we're going to new contract highs by Friday. And you've also seen me be right 100% of those calls. Well, I can't say that again because look at what's happening here. We're actually putting in something that may be a rounded top. That's the S&P. Let's go to the next chart. Okay, NASDAQ chart. Again, a good market will just continue to make highs, dip a little, and go back for new highs. The NASDAQ put a high in, put another one in, but then started to fail here. Now, NASDAQ is generally the leader, at least I have found, between the S&P and the NASDAQ markets. NASDAQ will be your leader. If, in fact, NASDAQ does not put in a contract high here, we are beginning another rounded top. Very interesting for a bull-minded trader like me. I'm finding myself saying for the first time, wow, maybe I'm going to be in the bear camp. Now, I haven't completely switched over to bear camp yet, but with action like this, hey, I'm no old dog that needs to be taught new tricks. I'll jump into that bear camp in a flash if that's what needs to be. And if you guys have been following me, you know I've been bullish for quite some time, but this sort of action is very questionable. Keep your eye on the NASDAQ, S&P, ER. Watch all of the indice markets here. If we fail to make new highs, understand something, ladies and gentlemen. They fed the bull here on Friday, or last week on Thursday. They did not touch interest rates. After the market broke, the Fed did nothing to interest rates. That is feeding the bull. You should get a new contract high. We failed to get it. It's flirting with those numbers today. I am telling you now that if we fail to get above contract highs in NASDAQ and S&P, I am going to start seriously taking a look at the bear camp. Keep your eyes on those charts. We also talked about 200-day moving average in gold. You've seen me talk about how anywhere around that average gives you big moves. Well, as of today, we actually got ourselves just above the 200-day moving average. Is it terrorist-driven because of what's happened in Scotland and in Europe? I believe it is. However, I am a technician, and when a market gets above a 200-day moving average, I start to become bullish. You need at least 2, but likely 3 settlements above the 200-day moving average. 2 to 3 settlements above the 200-day moving average will give me my bull signal once again in gold. For now, it just got above this afternoon. I would be cautious getting long the gold here. However, with the geopolitical being what it is, gold jumping up and getting above the 200-day moving average is not something unexpected. But remember, before you jump in and get long, make sure you have 2 to 3 days settlement above that average in the gold. Okay, here is another look at something different. You have bonds. A bit of a flight to quality here, it appears to me, after what happened in Europe. The bonds are taking off. But what you do have happening are bonds going up. When bonds go up, that means yields and interest rates go down. Bonds are fixing the interest rates for us. It leaves us in a bit of a quagmire here because the S&P, NASDAQ, you name it, indice markets have been feeding off of the idea that interest rates have been going down, making our products cheaper, making people come in and buy our stocks because our exporting becomes cheaper. But interest rates, you know, we started to get the spike up for a little while. Again, the inverse, market down, futures down, interest rates up. Well, if futures are up, interest rates are down, that sort of negates us putting a top in. So again, we are at a very difficult trading area in the markets where you have bonds beginning to head back up, pushing interest rates down, and you have a possible rounded top in the S&P and NASDAQ market. So very interesting here, guys. Do your homework. Watch out for these bond yields. They are all important here as we're going forward. The inverse of bonds is the US dollar. Look at the spike down we've just had here in the US dollar. Dollars going down is what we've had happening for a bit of time here. It seems to be what's going to happen for a while. The government needs to push our dollar down at this point, it seems to me, to keep the markets going higher. The thing with that is you can't falsely push a market higher. If in fact the S&P has reached the point where that rounded top is in, it doesn't matter what the Fed tries to do, that will merely be a band-aid and the markets will head down. Now, again, am I in the bear camp? Not at the moment, but I am more teetering on bear than I have been in 4 straight years. If the dollar continues to head down, it likely will now do the inverse of what the dollar's been doing lately, which is dollar down, spurring people to come in, grab our dollars, and pushing our stocks up. What I'm noticing now technically is that if dollars continue down and euros continue up, like you're seeing in the euro chart, then likely is our market is going to begin to falter. Keep an eye on these charts, ladies and gentlemen. I'll bring you more as the markets start to show us their complexion. Again, I need to remind you, discount what you see during a holiday week. But this is stuff that's been brewing for a while. It didn't just start today. I just wanted to bring it to your attention. So there's my chart segment for now. They are interesting. I will keep you informed and up to date on these charts as we walk forward. So you've seen the chart segment. You see, you have a little bit of a look into what I am looking at. Again, you guys, my Omniacs that have been following me, I have been the consummate bull. I've not been overly insanely bullish, but I've always looked for a pullback and a new high. Again, the Fed fed the bull. The FOMC fed the bull market by not touching rates, and we did not race for new highs. Let's see what happens. I will say it. If S&P and NASDAQ does not get there today, especially NASDAQ, it came close, that it's beginning to confirm a rounded top has begun to form, and downside action we should get, which means we become sellers of these major rallies. Let's see what happens. For today, with that in mind, S&P to ESU7, the SPU7. Sell short in the mid 1520s. I say the high 1520s. If you guys caught my flash, you seen I was getting short somewhere above the 27 mark. The high 1520s, I am looking to sell this thing. Put stops in where your account can afford those stops, but stay out of the danger zone, ladies and gentlemen. I know it's difficult to find those areas, but do your homework. Figure out what stop you can live with and be comfortable with, and put your stops in above the market. Always place your stop first. My profit objective on the downside would be nice 1514, a drop down to the 1514 area, or somewhere just above or just below. I would get out of that trade. So again, I'm selling in the high 1520s. I expect it to drop down to the 1514 area at some point, or be out MOC. That's based on my rounded top formation that's beginning to come in. I'll say it one more time. I have not jumped into the bear camp yet, but for the first time in a while, I'm teetering, baby. I'm teetering on this thing. Wow, imagine me becoming bearish. I can't remember the last time I said I'm a bear over long term in these markets. So that excites me because I don't mind flexing my bear muscles a little bit here. You know what I mean? I've been a bull for a while. I would love to turn into a bear. Bear is quick and it's down and it's decisive. It's like wham, bam, you've made your money or you've been knocked out, but it's like that. And that action I really enjoy. So let's see what we get on that. Okay, don't forget, keep your stops in, place them first. Do your homework at all times. Please shoot me out some emails anytime you'd like at oscar@futuresanalysts.com. If you'd like to subscribe to my YouTube videos, go to my YouTube spot, www.youtube.com/futuresanalysts. Hit the subscribe button. That will make YouTube send you my video, or at least a message that my video comes out the moment we put them out. I'm manning these phones 24/7. You guys know that. Call me anytime you want to chat, and that number is 718-351-2266. Again, the format change, most of it is already beginning to take place. It will be completely formulated by the time this holiday week is over. The webinar room will open up. The seminars will start to do. We may even include a premium room at a certain point. So guys, stay tuned. It's going to be exciting. I'm gonna be at my computer where you can see my desktop. You can hear my voice, and I'll jump up and hit the camera and come do illustrations on my videos, all within an open microphone session throughout the day. Should be exciting, so you guys sign up when the time is right. We'll put the forms right out there on the site for you guys to sign up. And Bob, when will that be ready?
It should be ready right after the holiday weekend.
Yeah, right after the holiday. We've been working on this day and night for 2.5 straight weeks. And Bob's one of the best that you can find out there, so rest assured it will take place. Okay, ladies and gentlemen, and this is something I tell you all the time, and don't forget to say this at night, say this in the morning, say this before you place any orders, say this all the time, and we know what that is. Stops are in, emotions are out. Look at the camera.
And cut.
I was laughing all the time.
That's okay.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.